In last 3 weeks, I have attended three different option conventions in from three different places. Like initially, I went to Surat where I was able to meet a lot of traders, specifically option sellers. And there was another event conducted by E-Learn Markets face to face, where that was again for option conventions, where multiple speakers came and almost 300 plus participants came, and most of them were option sellers. And even recently last week I went for an event organized by Share India, where almost all Twitter traders were there. So where more than 150 people were coming to this event for Share India, again that which happened in last week in Goa. I was able to meet a lot of option sellers. And in last 3 weeks, what I've realized is I've like almost 19, not even 19, almost 99% of the people whom I've met and interacted with them are option sellers, and many of them are managing funds. Like managing funds is like not just 2 crores or 3 crores. They are managing more than most people are managing more than hundreds of crores, and everybody is into option selling. So at one point, what I thought is, okay, it is good, like there is a very good growth for this specific industry where many people are getting into options and more people are getting into fund management. Probably this is good for them as well as for the markets. But on the other end, I started feeling really anxious about it. Like, if everybody is into option selling, will it cause any issues? Will there be any problem for the markets? Will there be any big crash that could happen which could overall affect the complete option sellers in altogether? So that is what I thought. So as soon as I came back to Chennai, I started researching more about this specific topic, why there is a sudden increase in option sellers. Like, everybody that you are meeting, even if you are a guy who is watching this video, there is a 99% chance that you are an option seller, or there is a 99.95% chance that you are an option buyer who is trying to get into option selling. Because option selling, it has become more famous after the introduction of weekly options, and specifically after the year 2020, when many COVID traders started trading. Many of them thought option selling gives them a consistent returns. In fact, that is true in one case, because most of the traders whom I have met, they are able to make consistent returns every single month through option selling. So what I thought is, just because I met some few hundred traders in all these different events who have been doing option selling, because of that, am I assuming that most people are doing options selling, or is there any specific data that is backing these claims? So are really people doing more options trading compared to like 5 years or 6 years before? I just wanted to ensure that. So I did a detailed analysis and I downloaded most of the data from NSE website itself. So let me show you how there is how the growth has happened with respect to different segments, like how the growth with respect to futures, index futures and stock futures, and then index options. So the chart that you're seeing right now is actually the index futures, the number of contracts traded every year from 2010 to 2022, almost for the last 12 years. It shows how many number of index futures contract has been traded, Nifty and Bank Nifty. As you could see, it has been steadily declining from the like from 2010. If you could see, initially it was really high, but slowly it started diminishing, and by 2017 and 18 it almost bottomed out, and again from 2019 and 18 it started picking up. But it is like overall the trend, if you see, it is almost declining. So the number of traders who are trading in index futures has been diminishing over the last 10 to 12 years. Now let's look at the same data for stock futures instead. So instead of earlier we saw index futures, now it is stock futures, where all F&O stocks futures contract has been considered. So it shows the number of contracts traded by stock futures from 2010 to 2022, as you could see. So it is almost stagnant. If you could see the last 5 or 6 years, it is almost stagnant, and there is neither an increase nor a decrease. It was almost flat for stock futures. So now let's look at the data for index options, number of contracts traded by index options for the last 12 years. As you could see, it is enormous, like from compared to 2010 and compared to 2022, in the last 12 years it has grown more than 11,700 times. So almost 118 times the number of contracts traded has increased exponentially. So it is not even cumulative, it is year wise. As you could see, from 2016-17, after starting the introduction of weekly options, it did not pick up much, but 2018-19 it slowly started picking up, and 19-20 it picked up further, and after 2020 it has started skyrocketing. And specifically, if you see for the last year, and the number of contracts traded is enormous compared to the last 12 years. Last year has seen phenomenal growth with respect to index options. And specific to index options, this many number of contracts being traded compared to index futures and compared to stock futures, this is very high. So after looking at this data, it made me more anxious. Like, during the meetups, okay, you could meet few hundred traders, it's fine, but based on the NSE website data itself, we could see the number of option contracts that is being traded every single day is growing phenomenally. And whether this is going to cause an issue or not, we are not sure, but this is an alarming rate. Like, the number of contracts that is being traded year on year growing at this kind of pace is very alarming. Even if you look at the year on year growth, let me show you the year on year growth chart. So as you could see, this is the year on year growth of option overall contracts traded, turnover growth and everything. So in the last 5 to 6 years, if you observe, 2017, 18 and 2018, 19 onwards, every single year more than 75% of the growth has been witnessed by index options. And specifically 2022 and 2021 and 22, the last 2 years, we were able to see more than 125% increase in options turnover and overall index options growth. And it has steadily seen back to back 2 years, 2021 and 2022, both years, we could see more than 125% increase in growth, 100% increase in option traders, option contracts that is being traded. So this is really huge compared to any other segments. And this is something that we have to really be concerned about, because many of them we know that they are option sellers. So this, we are not really sure what kind of issues that this could bring in. So I started researching more on this topic, like how increase in options turnover could cause what kind of issues. So I started researching specifically about US markets. So when I started researching more about the US markets, I could see that not only in India, even with respect to US markets, the number of people who are trading options has specifically increased. And more than that, the number of people who are specifically trading on expiry days in US has increased phenomenally. And also there is a specific data released by Bloomberg where it shows that the number of reversal days, for an example, if say suppose Bank Nifty opens here and it starts going down, and usually when it goes down, the trend continues, and usually it goes up, the trend continues, right? But as per Bloomberg data, the S&P index has seen more number of reversals after global financial crisis. So after 2008, this last 2022 is the year where they have seen most number of reversals. Like, if market goes down, most number of reversals greater than 1%. So if market starts going down from day low, again it would start reversing up. Like, if market is going down and if it starts reversing and then starts moving up from here, so those kind of reversals. Or if market moves up and then starts moving down, so those times where how many number of such reversals has happened, if you check in the last 10-12 years, 2022 has seen highest number of reversals after 2008. So this can also be a concern, because this is specifically happening because most people are option sellers. So option sellers usually lose money when when there is a specific direction in the market. If market continues to trade in one-sided direction, obviously they'll try to lose money, because most of them try to hedge their overall delta. So they wanted to be in a non-directional move. So whenever market moves down like this or moves up like this in one-sided direction, they're trying to arrest that move. Because of that, most number of reversals are happening. And also because of the concentration of more number of options sellers who are specifically getting into expiry day trading, this has also created some gamma effect. And there was a Bloomberg article which I found which states that, and also there are certain quotes which I wanted to read it out. The explosion in short dated contracts is concerning to Brent, the founder of Spot Gamma. The flow, he says, can inflict large volatility on markets as it forces market makers to actively hedge these positions. And he has mentioned that this is a recipe for things to break, and it elevates risk. The risk we feel is that of a major headline or other data points that either catches the short dated volume offsides or triggers an overwhelming flood of directional volume. So he basically states that this kind of concentration risk on specific to options selling, and that too on expiry day, could cause large volatility, and there could be a day where he expects that it could cause huge directional move on one side. where when every option sellers are trying to cover up their position, it could create a huge gamma effect, and at that day it could be even a black swan event. No, it can also be a big headlines event also. So this is specifically causing a big concern not only for Indian traders, even for the US traders. So this article shows the number of contracts traded by exchange across the world, not only Indian exchange, like other exchange, US exchange, Singapore exchange, Hong Kong, Korean, every single exchanges, the data gets shared. How many number of index option contracts is being traded across all these exchanges? Do you know who is the number one derivative exchange in the world? It is actually NSE India. NSE India is the largest derivative exchange in the entire world, and based on the number of option contracts traded, India ranks at the number one, and the second rank and third rank, they are nowhere close to India on when you calculate based on number of contracts traded. So let me show you the chart. So this is the data which is being published by NSE every month. So this was the last month, February month data, where number of contracts traded in index options across all exchanges. As you could see, NSE is the top. It is first number one exchange in the world in terms of number of contracts traded, followed by Korean exchange, and then only followed by Chicago Board of Exchange. So first India, second Korean exchange, and then followed by CBOE, and then followed by other indexes across the world. Other exchanges across the world. But if you see, find out, zoom in and check out what is the number of contracts traded across all these exchanges. During 2021 Jan, 738 million contracts were traded in NSE exchange in index options. And then Jan 2022, the number of contracts increased further, where almost 1,867 million contracts traded by Jan 2022. And by Jan 2023, that almost increased 3 to 4 times. That is almost 4,374 option contracts traded by Jan 2023. So year on year, that is 134% of increase we are witnessing in the last 3 years. Compare the same thing with the other two top exchanges. So the Korean exchange, which is around 83 million contracts, as went to 70 and then went to 67. It is a decline in year on year. And with respect to CBOE, initially it was 37 million and then 51 million and then 67 million. That was also average of just 32 million increase. But with respect to Indian exchange, the number of option contracts traded in India has increased exponentially. So all this data suggests that there is a high concentrated specific segments in India which is specific to index options. And now we have Nifty weekly options, Bank Nifty weekly options, Fin Nifty weekly options, and again they are adding one more weekly option which is going to come on Friday. So this is all going to increase a concentrated risk, whether it's going to create a systematic risk or not. But thank God they have removed a leverage, intraday leverage. Earlier people used to trade with 6,000 per lot. I remember there are certain brokers used to give 2,000, 5,000, 6,000 rupees per lot leverage, where you can easily trade one lot with 3,000 to 4,000 rupees. And now both intraday leverage and overnight leverage is same. So it might not cause a big impact, but still, what in case if there is consider all the worst case scenario. If you are an option seller, let's consider all the worst case scenario. Most of the option sellers, they assume the worst case scenario only for overnight positions. So that is why when they take any overnight positions, they take a OTM hedge maybe 1,000 points away just for margin benefit. And also if they say, okay, in case of any overnight issues or any kind of geopolitical events that could impact, so that they don't lose all their money. So somehow they hedge it even for margin benefit, or even if there is 1,000 points away strike, still somehow it controls the damage. But most of them think all these black swan events can occur only during overnight events or overnight positions, only for overnight positions. What if in case there is a black swan event for intraday positions? Now we say that mostly what happens if the broker goes down. Forget about brokers going down. What if in case the exchange itself goes down? So NSE exchange itself goes down. You have an open position and NSE exchange itself goes down, and you are seeing that international market, the prices are declining because of some political events or because of some issues. There is some bad news, so all the international markets are declining, and you are seeing that the price is not getting updated with NSE because NSE itself has gone down. And if you think that that is not possible, it has already happened in the past. So during 2021 February, I think it has already happened in the past, where NSE totally gone down. So after 1 o'clock the price was not updating, NSE closed down the exchange and they reopened it only by near to day end. So all these glitches happened. So what if in case such kind of glitch happened for your open positions? What would happen? The first thing is the stop loss gets cancelled. So all your stop loss, even with respect to option selling, futures buying, everything, all your stop loss gets cancelled. So whatever the risk that you thought, okay, 20% is my stop loss for my options, would have gone there. That's all. And to make the situation worse, the NS itself has gone down. And you're seeing all the international markets are bleeding and it is going down continuously. So what will we do? So how do you protect your overall intraday system? So you thought it is going to affect only overnight positions, but now it is affecting your intraday position itself. So this is the worst case scenario. So risk is something what we don't see. So it is just we have to be prepared for that. So in this case, we might know or it might happen or it might not happen, but it is better to assume that okay, something worst might happen, and if that worst situation happens, still I'm not going to be affected, I'm not going to be thrown out of the markets. So that is what we have to keep in mind. Even with respect to my own platform, like the platform which I'm running with respect to Square of Bots, most of the option selling systems are like specifically related to using a stop loss. So not only my platform, Tradetron, Quantiply, any kind of platforms you take it, most of the algo platforms which you use, most of them are option sellers which use fixed stop losses. That is what being used by most of the option sellers. So it's better we need to use the hedge mechanism. So that in case of such kind of worst case scenario, at least your whole portfolio is not wiped out. So at least even if it goes down 10% or 15%, or your overall capital is not blown out and you are still there, you are still surviving next day to take the next trade. So that is what very, very essential. So that is what we are also working towards now. So we start instead of focusing on creating systems which is based on fixed stop losses, we wanted to create risk defined strategies. So not only to buy OTM hedge for margin benefit, there should be if at all we create any further new strategies, it has to be purely based on hedge. We should clearly know what is the value at risk at any point of time, whether the market is going up or going down, going up 20%, going down 20%, or it is getting crashed. No matter what kind of scenario, we should always know what is the risk that we are going to take. So just not based on stop loss, but based on the complete hedge position. So if you're an option seller who is trying to get into the markets, or if you're already an option seller who is managing a huge sum of returns, huge sum of money, it's better to focus on these kind of scenarios and accordingly create your risk management. So just having a stop loss is not a proper risk. Probably this is a time that we should think of the worst case scenarios and start creating strategies, or start having hedge based strategies, not only for margin benefit but also for protecting the overall risk. So this is what I wanted to convey in this video. So thank you so much for your time. If you guys have any questions, please post in the comment section. I'll address them. Thank you.